up, fellas? It's your boy Jay Trades back at it again with another video. What I will be going over today is a simple analysis of a play that I went ahead and alerted in chat and also did go ahead and take in real time. This was last week, but I'm just going to go ahead and go over this setup play. It was a falling wedge setup play that I did take with the 9 EMA theory that I have going on, which essentially is I will be showing it here later on in the video. But what it essentially is doing is when price action is impulsing from below the EMAs to above the EMAs, for instance, in this example here, when it's impulsing from below to above, I will go ahead and explain kind of in detail why I look at that with the relationship of price action, right? So this green line here is my 9 EMA, red one, 20 EMA, my VWAP, and my 200. When price action is above, for me, for myself with SPY, when price action is above the VWAP and the 200 EMA, for me, this tells me bullish action, right? Same thing on the downside. If it's underneath, it tells me bearish action. But when it's in between the EMA, the 200, and the VWAP, that tells me that this will congest more than actually trend, right? Until it breaks one or the other. That's something that I do look for. So let's go ahead and start taking a look into this. This is just going to be a replay mode to the build up to the actual setup, and then I'll be able to explain furthermore into what my thoughts are during the actual trade, right? So let's go ahead and start playing this. So from here, you're noticing that this is something that I look for a lot with the EMAs. You're noticing price action is extended from the EMAs. The EMAs have a gap. So this pullback is just to me as a potential, like it's just a pullback, right? Not necessarily like a reversal. For instance, here, right? You see price action extended, yes, but then it impulses from having the 9 EMA as support to then being in between the EMAs, the EMA gap, and then essentially turning the 20 EMA into resistance. So then that's essentially when the EMAs begin to cross, right? So for instance, let's see, like for instance that, right? This will come right back down, retrace, and then continue downward. That would be that bearish action, right? To look for within these EMAs. I just drew that as an example. And this is essentially what I'm looking for me to be able to capitalize on moves much sooner rather than later, right? Let's go ahead and start playing this. So here it's already going underneath, holding the 20 EMA as resistance and breaking below VWAP. So that's already bearish action. In just this scenario right here. Let's go ahead and keep playing it. As you're seeing, okay, for instance here, right, we're noticing tweezers right here underneath. So, and like I was stating earlier, this price action is between the 200 EMA and VWAP, and look at the EMAs in relationship to the price action as well, right? So here now we have the actual EMA cross. So that's already giving me that bearish indication, because when the 9 EMA is above the 20, above VWAP, above the 200, for instance here, this tells me, hey, these are the ingredients that I look for a nice bull run, right? But then when it's on the other side, it's also the opposite, vice versa. So let's go ahead and keep playing this. I'm noticing. So for the 5-minute EMA theory to go ahead and play out, you would like for price action to go from below the 9 EMA to above the 20 EMA, and then come right back down and then retrace to then continue upward momentum, right? But here what we're noticing is that VWAP is right aligned with the actual EMAs. So that can also act as resistance and stopping it from actually pushing upward rather than and keeping it in this smaller range that forms. Let's go ahead and take a look here. So for instance here, right, this looks like a nice like a nice move here, for instance, right? But you didn't necessarily see that actual action go above the actual EMA here. It was resisted right below, and the VWAP was still there. So that's not technically the actual EMA theory for myself right here, right? Let's go ahead and take a look here what continues to happen. Okay, it's still playing within this area here, right? Between VWAP and between the 200 EMA here. Notice price action is staying within this range, right? Within the smaller range. So here you can already start drawing a pattern, right? So for instance, here right now we have a triangle that's forming, right? Let's go ahead and keep playing this. You're noticing price action is extended from the EMAs, and the EMAs also have a gap. So this 1 minute upside break for me is just a pullback for now, right? So let's go ahead and continue. Okay, and look what it actually does. It comes down and sweeps the 200 EMA. Market makers do this a lot, especially when they want to get in at a nice price. So in order for market makers and big money to go ahead and get in, they need to create some sort of liquidity, right? So they'll sweep it down. Big money creates these big wicks. Look where it's being created, right at the 200 EMA, for them to go ahead and tweeze once again, right? So now we're looking at this as a falling wedge right here, right? Tweezers here, essentially tweezers down here is the tweezer pivot. More tweezers here, giving you indication that, hey, this is more bullish action than bearish action, right? So let's go ahead and keep playing it. Okay, look at this right here, right? You see the difference, how it impulses from below to above? This is already giving me indication that price action is close to the EMAs. The gap isn't very big, so it's much easier to get through rather than having this bigger gap here. So let's go ahead, and this is what I would do, right? Once I notice this action happening, I go ahead and plot my fib, the top to the bottom here, and I'm essentially looking for this to hold, this area to hold, to then go ahead and catch the move before the move actually happens, right? Because for instance, for a nice run, the EMAs have to cross, and essentially here the EMAs have not crossed yet. So this move here allows you to get in much sooner rather than later. Yes, of course, the safer entry is definitely when the EMAs cross, but noticing this allows you to get in much sooner. So let's go ahead and see what actually happens with price action here, right? See, for instance, this is already a nice entry right here, right? You're noticing that it's breaking out from this actual pattern. So it's already breaking out, right? It's holding this golden ratio right here, which is, for me, I consider this as a healthy pullback, right? When you're doing this, you're plotting it from here, for instance, the top, the one up here, the zero down here, get the retracement, and then target the 1.272, which in this case is right by VWAP. So with confluence of the breakout, with confluence of this EMA theory happening, once it begins to hit this price action here, if it begins to break it, it will gain momentum, and the momentum is what pushes it, right? So I look at the market in two ways, right? The corrective form and then the impulsive form, right? So for instance, it's the pattern and then the breakout. So that's the corrective, impulsive. So here you're noticing it's a corrective form, right? Beginning to break out, the retracement for a healthy and nice pullback, nice entry. The risk is very good. Let me go ahead and plot, for instance, let's look at the risk here, right? Long position. If you want to go ahead and answer with this being the risk here, let's say you enter right around this 9 EMA here, you're targeting this 1.272. The risk is already amazing already, right? Your risking is nice. Let's say here, right? That's a nice risk. You're risking this, essentially this golden ratio here. So let's go ahead and take a look at what happens next, right? Let's look at this. So it begins to go ahead and push up. And as it's actually chasing this VWAP here, it'll gain the momentum to actually go above and then come right back down, retrace and hold, so then continue the next leg, right? But this is essentially, you're getting that A1 entry, very low risk entry, right at the breakout. And you're noticing this right through the EMA, that it's turning from the 9 EMA from resistance to essentially turning these into support, right? So for instance here, it's extended and you have the EMA gap. It's extended and you have the EMA gap. But once it becomes this action right here, this is when I begin to look for an entry, right? You're just looking for the retracement for a healthier entry and a better entry. So let's go ahead and keep playing this. It essentially goes right above, right? So now the next question is, hey, what if I missed this entire move? where can I go ahead and look for another entry, right? Let's go ahead and take a look at here. So here you already have the 9 EMA above the 20 EMA, above VWAP, above the 200 EMA. So it's no longer in a congestion zone. It's more in a bullish zone. So this already tells me bullish, right? So what am I going to do? I'm going to plot my fibs once again, and I'm going to look for a nice retracement to be able to go ahead and look and enter this. So for instance here, right, this is the top wick. You're no longer seeing that these wicks are surpassing this past wick. So that's my top point. So now I'm going to go ahead and wait for it to go ahead and give me the best entry either at the 9 EMA if I'm noticing that it's a nice price action, or it can definitely still come all the way down to this golden ratio to then continue upward, right? Because essentially this is the actual healthy pullback within this impulsive move. So I'd be looking for this. Let's go ahead and take a look at what would happen here, right? You're noticing price action. It's holding here. So essentially you can go ahead and enter once again here, right? This is a nice entry that you can potentially take. This is already being looked at as a flag. Let's go ahead and take a look at what does happen. So that would be already the breakout here. Okay, and look at this area right here once again, right? Which is the zone. So it does seem here that it has been created, for instance, a sweep in a sense. You can go ahead and redraw your trend line, but as long as you're getting within this area here, this is the safest bet for you and the safest entry, right? Because you're getting it closer to the golden ratio. So let's go ahead and take a look. And essentially here, I can probably tell you that it's going to come right back to VWAP. So you can go ahead and get some entries and then continue upward. You see how it wicks right at VWAP? It wicks down here, another hammer, essentially a bigger bodied hammer, a hammer here as well. So these are all bullish momentum candles, letting you know that, hey, momentum is still bullish. The EMAs have yet not crossed. So here, for instance, it's still giving me a good indication that this is continuation upward, right? Let's go ahead and take a look at what happens. But here, essentially, you can go ahead and plot smaller fibs. Let's say you got the breakout. Go ahead and plot these smaller fibs. Look where it's being held, right? So you're essentially getting a smaller, the smaller move here within this golden ratio. Look where it taps it. It taps right at the golden ratio. This is being held right at the golden ratio, right? To then continue upward to the next leg, right? So like my arrows that I had previously drawn over here was looking for this 1.272 up here, right? Let's go ahead and see if it does actually go ahead and hit. And once again, right, think about the congestion, impulsive, congestion, impulsive. So that's how the market moves, and that's the easiest way to go ahead and catch moves. Waiting for this corrective move, preparing yourself for the impulsive move. Right? It technically just hit it right here. So you're looking for the nicer entries down here and the targets up here, right? And look at this one, it actually continues to run. And for instance, at that EMA theory down here, right, you essentially got in down here. Let's go ahead and take a look at this long position now. Let's say you had entered right around the 9 EMA. You don't know your reward, but you know your risk, right? That's the important part to know first, right? It's first most important, crucially, to know that where your risk is rather than the reward. See, so you don't necessarily have or know that this is going to come all the way up here. But look, essentially, look what it's actually giving to you, right? You're essentially risking 0.05% of SPY's price compared, and look at the reward, 0.71%, right? Which is $2.97. Let me go ahead and give you here. Let's take a look more, and I do believe this does continue and keep running up here, right? This actually hit my 1.272 that I was looking for on a higher time frame, and I actually called these numbers down over here in chat, and we were able to go ahead and get that hit. But essentially, this is what I look for. into my plays, and also looking at the EMA theory for confluence for getting in that best and much sooner and quicker move rather than coming down over here where essentially your risk would be already above your actual entry if you were to take it in over here, right? So that's essentially how I look to take plays. I essentially look for this EMA theory here that I have going on to be able to head and capitalize within the moves before they actually move, right? So yes, thank you once again, and we'll be back next week with another video.